If you're completely new to investing, don't worry. The world of stocks and investments might seem like a maze of numbers and jargon, but with a little guidance, you'll realize it's not as complicated as it seems. Whether you want to grow your savings, plan for retirement, or just understand how the stock market works, you're in the right place. Let's embark on this journey together and understand the basics step by step. Let's understand the basics together. The stock market is basically a marketplace where investors buy and sell shares of publicly traded companies. Think of it like a giant auction house, but instead of bidding on antiques or art, you're bidding on pieces of companies. These pieces are called stocks or shares, and owning them means you own a part of that company. Investing in stocks might seem intimidating, but it's really like owning a tiny piece of a company. When you buy a stock, you're buying a small share of that business. This means you have a stake in that company's success, and in some cases, even a say in how it's run. The value of your investment can go up or down based on how well the company performs and how the market views its future prospects. Think of it this way: when you buy stock, you're buying a small slice of that business. Just like having a slice of pie, you get a share of the company's profits, which are often given out as dividends. Dividends are regular payments made to shareholders from the company's earnings. Not all companies pay dividends, but those that do provide an additional income stream for investors. First things first, you'll need a brokerage account. This is your gateway to the stock market. A brokerage account is like a specialized bank account that allows you to buy and sell stocks, bonds, mutual funds, and other investments. There are many brokerage firms to choose from, each offering different features, fees, and services. Some popular options include traditional firms like Charles Schwab and Fidelity, as well as online platforms like Robinhood and e-Trade. It's just like your online bank account, but for buying and selling stocks. Once you open your brokerage account, you'll need to fund it by transferring money from your bank account. This money will be used to buy stocks and other investments. Most brokerage accounts also provide tools and resources to help you research and track your investments, making it easier to make informed decisions. There are tons of options out there, so choose one with low fees and an app that's easy to use. Next up, do some research. Before you start buying stocks, it's crucial to understand what you're investing in. This means researching companies, industries, and market trends. Look for companies with strong financials, a competitive edge, and a history of growth. You can find this information in company reports, financial news, and investment websites. Look for companies you believe in that are growing and have a good track record. It's also important to diversify your investments. This means spreading your money across different companies, industries, and asset classes to reduce risk. By diversifying, you can protect your portfolio from the ups and downs of individual stocks and market fluctuations. Don't worry about buying the perfect stock. Focus on learning and gaining experience. Start small. Investing is a skill that takes time to develop, and it's okay to make mistakes along the way. The important thing is to learn from those mistakes and keep improving. Start with a small amount that you can afford to lose and gradually increase your investments as you gain confidence and knowledge. You don't need a ton of money to get started. Even a $50 investment can get you going. Many brokerage accounts allow you to buy fractional shares, which means you can invest in expensive stocks like Amazon or Google with just a few dollars. This makes it easier for beginners to start investing without needing a large amount of capital. And remember, investing is a marathon, not a sprint. The stock market can be volatile in the short term, with prices going up and down based on news, economic data, and investor sentiment. However, over the long term, the stock market has historically provided strong returns for investors who stay the course. By focusing on long-term goals and remaining patient, you can ride out market fluctuations and build wealth over time. Stay patient, stay informed, and watch your money grow over time. Happy investing. Staying informed means keeping up with financial news, company earnings reports, and market trends. This will help you make better investment decisions and stay ahead of potential risks. Remember, investing is a journey, and the more you learn, the better equipped you'll be to navigate the market and achieve your financial goals. So, take the first step today and embark on your investing journey with confidence.